Well, hello everybody and welcome to Real Wealth Network's weekly webinar. Today, as you can see, we are speaking about the Windy City, Chicago, Illinois. Thanks for joining us. This is Ben Smith. I'm the Director of Investor Relations. I also am one of the 3 investment counselors that most of you speak to at some point in your Real Wealth Network adventures. So anyway, today was September 6th, 2018, and looking forward to talking all about Chicago. It's a great market. There's a lot going on, and we're going to hear from our affiliate there who will talk all about not only the suburbs and the houses out there, but the 2, 3, and 4 unit flats in the city. All right, the strategies mentioned today in this presentation may not be appropriate for everybody. Other options not mentioned may be more suitable for your specific circumstances. Consult your personal accountant, tax advisor, and/or attorney to discuss your specific situation. Past performance is not a guarantee of future results. Obviously, we only have the past to look at, but we're reasonably assured that those results are most likely to continue. But as always, real estate purchases are subject to investment risks, including possible loss of amounts invested. So while every effort is made to maintain accurate and current information, the possibility of errors and/or updates and/or market condition changes always exists. So I always just say, do your due diligence, trust what we say, but verify what we say. You know, we've done a lot of stuff to check people out, but it's always a good idea for you to do the same thing. So the affiliate you're going to be hearing from today has been with Real Wealth Network for a couple of years now, manages over 350 units. Like I mentioned earlier, does all kinds of different properties, not only single families, but also the 2, 3, and 4 units. And gee, I guess you're going to talk about 6, 12, and 20 plus units, which I did not know about. I'd heard rumor of. Average vacancy 45 days, and about most of the tenants are Section 8. So without further ado, I will turn it over, and we're both here, so I'll be asking questions too. If you have any questions, those of you listening live, and you've got your little go-to webinar control panel, go ahead and under the questions area, just type in a question, and I will get to most of them at the end. I should say we will, but if it's appropriate for what we're talking about at the time, I'll slip in some questions as we go ahead. So take it away. Let's hear all about Chicago.
Thanks, Ben. Thanks for having me. Yeah, we've been operating. I've been a longtime resident of Chicago, but we've been buying, rehabbing, and selling and managing properties on the south and west sides of Chicago for about 8 years now. And the southwest suburbs, these are the areas where we find the greatest opportunities for under market value properties and really high cash flow. And so these are the areas we've targeted. It's a pretty large space, so we can kind of pick and choose only the best properties. And we have single family homes, 2, 3, and 4 unit buildings, and then we do some larger buildings as well. We're a large city. We have an abundance of buildings and properties that need work, and so we're able to add value, via construction. So we found it a good space to work in and great space to invest in real estate. As the slide says, our average vacancy is about 45 days. If it's a market rate tenant, they lease up faster, but with the Section 8 tenants or CHA, those take a little longer due to the paperwork and the inspections. And we'll talk a little bit more about Section 8 tenants as we go through the slide. Why Chicago? A lot of people have heard good things and bad things about Chicago. We're a big city. We certainly have our fair share of crime and shootings and bad things that happen, but from a real estate perspective, it doesn't really affect what we do or anything that happens to our properties or our tenants. We find great opportunity here in Chicago, and we feel like we went through kind of a bad spell after the real estate crash in 2008, and we have slowly been appreciating, and our market has been coming back. And the good news about Chicago, while we have an incredible downtown area and suburban area, we find that we can still find really low price properties for sale and rehab them, add value, and turn them into really nice rental properties that have equity and cash flow, and at a pretty low price point. Some people think that the taxes in Chicago are really high, but in the space we operate in, they're really not. The average single family home, the taxes are about $1,500 a year. And we just had a tax increase, and the taxes on these properties went up a very, very small amount. We do have the third largest gross metropolitan product in the United States. We have a tremendous amount of building going on downtown. We have many Fortune 500 companies, and we are on the short list for Amazon's headquarters. And, I don't think there are a lot of cities that can take on that number of people in a short period of time, but we have an incredible public transportation system, train, buses. Our interstate system is very good, and we have O'Hare Airport and Midway Airport, and we're located on beautiful Lake Michigan. We have a beautiful lakefront, and we have right now, I think the number is about 61 cranes right now. You can't even rent a crane. And so I know we have a tour in Chicago in October, and I would welcome everybody to come out to that, because there's just an incredible amount of building going on here, and it's creating jobs and creating service industry jobs, construction jobs, and our city is really, really booming. And over the last 10 years, we lost about 1% of our population, but we see that coming back, and we just think it's just an incredible time to be investing in Chicago. And UBS and a number of major players have said that Chicago is the most undervalued real estate market in the country and in the world right now. What we're selling single family homes for, you can't even come close to building them for that price. You'd have to spend an extra $75,000 to even build a house like that. So incredible equity and value in these properties. And that, coupled with relatively low taxes and really high rents, is how we're able to get really high cash flowing properties, great returns. And of course, all these properties are financeable, so you can take advantage of these low interest rates, put 20-25% down and really get a tremendous return on your money. So we think that there's a tremendous opportunity here in Chicago right now.
Yeah, big time.
Of course, all the major corporations are located here. And I think we have 7,000 restaurants and all these major corporations and hundreds of museums and theaters and 5 major sports teams. And there's a lot of fun stuff to do in Chicago, but there's also a lot of commerce that takes place here. And the spinoff of the properties we offer are more in a blue collar, lower income space. So a lot of our tenants work in the service industries that feed these corporations. So there are abundance of jobs, and it's just a great time to be in Chicago right now. And we're excited to see what the future holds. We have the Obama Library that's going to be built, which is going to create a couple thousand jobs. And I think we have about 40 million tourists that come through Chicago every year, so that'll create more tourism. So the Tiger Woods golf course is about to start, and those are all things that are in the space where we're operating. And so the downtown area is booming. The area that we work in, which is to the south and west, again, a lot of construction. They're rebuilding the train stations. They're expanding the train lines to get further out into the suburbs. And so a lot of good things happening in Chicago.
Cool.
So to kind of give everybody an idea of what we're able to deliver properties for, single family homes, normally we're able to sell between $105,000 for a 3-bedroom, 1-bath ranch. And then, depending on number of bedrooms, number of bathrooms, our larger 2-story homes, like a 5-bedroom, 2.5-bath are more in that $135 to $140 price range. Our 2 to 4 unit buildings, we have some frame, we have some brick buildings. These are really nice properties to invest in. Again, we have an abundance of these properties in Chicago. And the frame, we can normally deliver around $75 a unit or $150 for a 2-unit building. And then for a brick building, we're normally in that $90,000 to $95,000 per unit price range. Again, depends if it's a 2-bedroom or a 3-bedroom, or if it has 1 bath or 1.5 baths. It's always a value add play for us, where we take these buildings, and if we can convert a room into a bedroom or add a half bath, we'll have our architect draw it up, and we permit all of our buildings, and we do our construction right. And so any chance we can add bathrooms, bedrooms, we always put 4-stair units so that the tenant pays for the heat and really makes a difference on your returns. And I think probably the most exciting part about Chicago, our rents tend to be about 1.25% of purchase price. And I think Real Wealth Network says, hey, anything north of 1% is a buy signal. And being able to offer 1.25, it is a wonderful metric that says that these are great investments here. And we can pretty much offer that across the board.
Let me just jump in real quick and say that, that 1% rule is something that we've been preaching for some time, and it's just getting harder and harder to find. You can't really find it at all in our appreciation markets, which, we kind of defined as anything in Florida or Texas tends to be the appreciation markets, and any place up in the upper Midwest, the Rust Belt, or even like Alabama tends to be cash flow, and you're more likely to find the 1% in the cash flow markets, but even in some of those markets, it's tough. So the fact that you average 1.25%, that's pretty good. So I just wanted to echo that.
Sure, absolutely. And our cash flow is fantastic here. The returns are great. The appreciation, we're just on a nice steady climb. I think, looking at this graph for 3-bedroom homes, back in 2012, I would say our, the starting point was below, wouldn't even be on this graph, and would be under 100,000. And now I would say 2018, fast forward, we're probably around the 110 to 115 mark. And so we're just way south of what these other prices are. And again, that's why everybody says Chicago is the most undervalued market. We're able to deliver really nice updated plumbing and furnaces and kitchens and baths, and all these homes obviously require maintenance. So when I say maintenance free, or as maintenance free as possible, we've updated a lot on these, and again, you look at the margin there and what you can buy a single family home for. Everything to us is on sale here, and it's just a great time to load up on these properties.
Obviously Chicago has the whole crime thing, which you touched on earlier, but the last time you and I did a webinar, you actually touched on it really well. You just kind of mentioned how, they scream the headlines, but it doesn't really affect you or your tenants. It's not like people are asking to move out of places and oh, I can't stand it here. I mean, it doesn't seem to really affect you or your operation. Right. You don't really see it that much, right? Would you mind elaborating a little bit on that?
Sure. Our office is located, again, on the south side of Chicago, and we have a suburban office as well, but our main corporate headquarters is on the south side of Chicago. And you see on the news, hundreds of shootings, and these things, a lot of this happens. We buy block by block in Chicago, and one block can be really nice, and a block or two over, it can be pretty run down and much higher crime. And, you really have to know your neighborhoods. And so bad things happen, I believe, in these metropolitan areas late at night when we're all in bed. And it's just incredible. We manage 350 units, and there might be a weekend here where you have, all these shootings. And you would think on Monday our tenants would call and say, boy, I heard shooting down the street, or, a friend got shot, and we never hear that. I find normally it's bad guys shooting bad guys, and it's these gangs, and the good people are tucked away in bed at night, and we don't see any of this by day. I mean, I've been working these neighborhoods for 8 years. I'm out going into vacant buildings and in the neighborhoods all the time, and some crime happens by day, but I'm out there all the time. My guys are out there all the time, and we just rarely see it. It seems like it happens in the wee hours of the morning. And so it's just one of those things that we look at the newspaper and say, gosh, it's just hard to believe. It almost seems like these numbers are made up, but commerce still goes on. The stores are open, people are buying and selling and renting, and it just doesn't seem to really have any impact on real estate values or real estate in general. So it's a strange phenomenon.
Interesting. Okay.
And I personally, from my perspective, as far as, someone being robbed or shot at or anything like that, we've never had that happen to any of our guys or any of our tenants. So I personally feel like it's getting a lot better. I think that There are more cameras in our train stations and bus stations. There are these high, resolution cameras, and more people, as the price of, these security systems and camera systems have gone down. You're seeing more and more cameras up on the fronts of houses. And, I just feel like technology is going to be the death of the criminal, because so many of them are caught because of all these cameras that are residentially and commercially. And so we're big advocates of security systems and video surveillance. And so we feel like, personally, we see things getting better. I'm constantly gauging people in the neighborhood, saying, how do you think the neighborhood is compared to what it was like, 10 years ago, 20 years ago? And everyone I talk to says, well, it's getting so much better. And part of that too is out-of-state investors buying, coming into these lower income neighborhoods and pumping money into them, improving the homes and buildings and creating appreciation and making it a nicer, safer, better place to live. And so it's a whole bunch of things that are taking place that are creating a better environment for everyone living and working here.
Right.
So a little bit about us. I've been in real estate and construction for over 25 years. And my dad had some rental properties. So as a kid, I grew up as his handyman doing work on those when I was in school. And fast forward, became a real estate broker and built a construction company and then a property management operation. So we kind of have all things under one roof. I've bought and sold over 1,000 homes. And so I know a lot about residential construction and value. And so I personally look at every property. I look at the foundation. I look in the attic. I spend a lot of time out in the field. And so I make sure it's got good bones, and I make sure the room sizes are there. So a tenant will move in and stay because there's a good layout. And I know in the past, when I've property managed for other people, I'll get a property that has small bedrooms, and we'll have tenants move in and then they'll move out because they'll say, the bedrooms are too small, or there's some problem with the property. And so there are a lot of places you can stub your toe when you're in real estate, as you know, and so making sure you make a good buy on the front end, making sure you're buying it at the right price, doing the right moves on the construction. We, over the years, have developed a product that is about as maintenance free as possible. And we never use carpet. We always use hard surfaces. The building materials that are out now are just incredible. I mean, they're incredibly durable. The laminate floors have gotten so much stronger, and the vinyl plank waterproof flooring is just incredible now. And so to me, all these products have just have gotten incredibly durable and really create, more of a maintenance-free house. We, try to wrap all the wood outside with aluminum, vinyl siding. Again, we try not to have to paint or paint as little as possible. And so again, it's all about making a very energy efficient, sound, weatherproof, safe environment for a family. And we make them nice. We, of course, do new kitchens and new baths and update the copper plumbing and do granite countertops and tile backsplashes. And these are really nice places for tenants to live, especially if they've been living in a dated apartment or a house. When they come into one of ours, it has a new construction feel, even though it's an older home. And again, our goal is low maintenance and getting our tenants to stay for a long period of time so we don't have turnover. So, we handle all the leasing. We market the properties. We, vet the tenants. We have our own in-house leasing department. And so we feel it's important to control that, getting a bad tenant. And from time to time, it happens where we get a tenant and we have to give them a 30-day notice and move them out. Or every now and then we have to actually evict a tenant. And so, sometimes we get tricked, or sometimes a tenant is good for 6 months and then something happens in their life where they have financial hardship and they're not performing per the terms of the lease. And so, we have to move them out and replace them. And so, but in the past, we outsourced that, and we had a lot of problems. And so as we grew, we brought that in-house. And the same thing with the property management. when I first started doing this, I said, I don't want to do property management. I do construction, I do real estate. To add the property management, it's just going to be too much. But, it was a blessing. I was working with a group from Australia, and they begged me to manage their properties because they were having a bad go with another management company. And so, I took over about 30 of those properties, and that was kind of how the property management company started. And, we learned the hard way, but over time, we continued to bring in really talented, maintenance guys and property managers and leasing agents and softwares and tracking. And over time, we've built a really good system. And we do all the maintenance in-house as well. And so, we're able to control those maintenance costs. And, our goal, I always tell investors, we own properties just like you. Our maintenance guys treat our properties the same way they treat yours. They don't know who owns what. They just know they're to give the tenant good service, show up on time, clean up after themselves, get in and get out, fix it right the first time. And so, our investors are able to experience the same level of service and savings, that we are. And we get incredible discounts through Home Depot and a variety of places that we buy material. And so again, we're able to pass those savings along. And our goal is to keep your maintenance costs down, get you high returns, and make you happy as an investor. And hopefully you'll continue to invest in Chicago and grow your portfolio here. And so, I feel like, working with a developer or a property provider, you really want somebody that handles all of these designations, because if you have to outsource some of these pieces, I feel like you lose control. And especially on the construction and the property management, those are really keys. But anywhere along the way, I mean, if you buy a bad property in a bad neighborhood, you're going to have a tough go of it. If you buy a good property and you do good construction and you do good property management, but you lease to a bad tenant, you're going to have a bad go of it. And so you really can't afford to drop the ball in any one of these areas. And so we're certainly not perfect, but when I look at what other companies are doing out there, we strive to really perform, at a high level in all these different areas. So, a lot of people ask us, Ben, about Section 8 and why we do Section 8. And, and some people are scared of Section 8. They've heard of horror stories that the tenant, wrecked their property. And I would never rent to a Section 8 tenant. And kind of, these are all things I even heard when I first started investing in rental properties. And, what I found is there are a lot of bad Section 8 tenants. They're called, it's called the Chicago Housing Authority or the voucher program here in Chicago. They've kind of gotten rid of the term Section 8 because it kind of has a negative feel to it. And so, we found that I personally think that probably, 30 or 40% of the Section 8 tenants, you probably don't want to rent to. And with market rate tenants, there's a subset there, again, that are not going to take care of the property or not going to abide by the terms of the lease and are not going to be somebody that we want to work with from a property management perspective or an owner wants to have in their home. And so the trick or the workaround there is you just don't rent to those tenants. And so we vet the Section 8 or CHA tenants just like we do a market rate tenant. And, we run their credit, their criminal, their background, their eviction history. We do a home visit, a surprise home visit. We want to see how they're taking care of their current property. And we fail a tremendous amount of applicants because they just don't qualify for one reason or another. And so most of these tenants are single mothers. They're incredibly hardworking. Most of them, there's not a father figure, and they have a number of children, and they are not skilled workers, so they have lower paying jobs, and they pay a portion of the rent. I would say on average about 20%. And so 80% is coming from the federal government, direct deposit every month, and then the other 20% comes from the tenant. Some pay very little, some pay 50%, depending on their income and number of children, and there's a formula for it. But I always challenge investors. A lot of investors are doing 1031 exchanges. They bought low and they sold high, and they have a windfall of money, and they can take that one property and turn those funds into 5 or 10 or 20 properties and diversify. And I think it's incredibly smart to do. But I would also challenge investors to, I think it's good to buy properties where you're going to see it's an appreciation play. Most of the investors buying in Chicago are looking for cash flow, and these properties are going to continue to cash flow. And so I always challenge investors out there. Most of the Real Wealth Network investors are wealthy. They've done well. They have great jobs. Everyone we've worked with has been a pleasure to work with, and just top-notch people. So you guys really attract wonderful people to work with. But I always challenge them that your money, this is really impact investing. Your money is going to help, on average, a single woman with children, and we're putting them in a wonderful place to live. It's safe, it's secure, it's updated, it's energy efficient, and so it's just a good thing to do with your money. This is part of why I do this. This was a social mission for me, because I saw a group of people that needed a helping hand. I like to fix up old buildings and refinish old furniture and fix up old cars. I just like to take old things and make them nice. And so, and I like to help people. And so this was kind of a win-win for me. And it's really been a lot of fun and very rewarding to, put a family into one of these properties that, has new kitchens and new appliances, and it's kind of a dream for them, and they're very appreciative of it. The majority of these Section 8 tenants are very appreciative, and they take good care of it. And we get some that don't, we have to move them out and replace them. But
let me ask you one quick question. So,
sure.
And thank you for that. That's kind of a nice little background on you and your reasons behind doing this. What about, we've got a lot of questions, and this always comes up. California and Illinois are considered the two least landlord-friendly states in the union, pretty much. And there's other exceptions, but could you talk a little bit about, obviously that means if it's going to take longer to get somebody out, then you have to really be careful who you put in. So obviously you guys do that, but how long does it take if someone decides to squat in the house and not pay? How difficult is it, and how often does that happen?
Yeah, I know in some states, 2 or 3 weeks you can have somebody packed up and out. In Chicago, in Illinois, it's longer. It is a tenant-friendly state, and kind of the process with us, if a tenant gets behind on their portion, we normally put them on a repayment plan. If they're 30, 45 days behind, if they get 60 days behind, and again, we're talking about 15 to 20% of the rent. So the rent, 80% is still coming from the federal government, but we still demand that they pay that portion. And so while these are small amounts, we normally, once they're 45 to 60 days behind on that portion, if they have not signed a repayment letter where we spread those payments out over the next 6 months, and we don't have that agreement, we then send it to our attorney, our eviction attorney, and within a couple of weeks, they're in court in front of a judge, and he gives them an option: A, you're going to be evicted, or B, do you want to go on a court-ordered repayment plan? And again, almost everybody goes on a court-ordered repayment plan. They have to come to court, make their payments every 2 weeks. We tell our tenants, please don't let this happen. Come do it through our office. Here's what's going to happen. But every now and then, somebody wants to do it the hard way. And so that's what we do. If they miss that payment, or if we say, hey, we've got this tenant and we want to evict them, it takes, again, a couple weeks to get them in court. And then it normally is about 60 days to have them out. If they attorney up and fight and say, we did something improperly, they can get maybe another 30 days, so like a 90-day period. Again, the benefit to the owner is you're still collecting 80% of the rent. And so if a tenant goes on a repayment plan, they pay for all the legal fees, which is about $950 for legal and court costs. But if we do evict them and we move them out and do a sheriff's eviction, then we can't recoup those monies. But that's kind of the time frame
right.
to move a tenant out.
Okay, that helps. Thanks.
So again, doing something good with your money, we think it's just it's funny, Ben, because while you're doing something good with your money, you're getting a great return. And so, it really does feel good. You're helping someone who's underprivileged, and you're getting really good cash flow. The properties are going to appreciate, they're all financeable. They almost always appraise out. Again, a house that we're selling for a 105 or 110, normally insurance company would value it, 175 to 185. So we just think these are great investments. And as I touched on before, so many people are doing 1031 exchanges, which is so smart, and putting those into a bunch of other single family homes and small buildings. And again, I just challenge every investor out there, anybody who thinks that, Section 8 is this government program where tenants just sit around and do nothing and collect, a welfare check and beat the property to death. And I'm sure that goes on, but our tenants, again, the vast majority of them have a job. Oftentimes they have two jobs, and they take pretty good care of their property, and they're pretty good, hardworking people. They don't have the education. They aren't in a union, and they've had a little bit tougher a go of it growing up in a tougher neighborhood, and so we think it's just a great thing to do with your money if you want cash flow. And you want to make a good investment and you want to help somebody out, this is a great way to do it. And so I always say, hey, buy one property and see how it goes. If you have questions about it, dip your toe in the water. And then the other question a lot of people ask is, well, what if the federal government stops the program? Or, but this program has been around for, decades and decades, and it's in every city. And there's just a subset of people that, do need a little assistance, and, to have it come from the federal government, even though like the state of Illinois and some of the other states, have pension reform problems and just like our federal government that can't balance their budget, the federal government is always going to be there. And since I've been doing this for the last 8 years, the first of every month, 80% of that rent gets direct deposited every single month. And so for us, we like it because it creates stability, it's less volatility, and the majority of the rent comes from the federal government. And, it's just a great way to collect rent. And then the other part of it is that, when a tenant starts making more money, their portion goes up and the portion from the federal government goes down, and vice versa. These tenants, because they're not skilled, they're oftentimes the first to be let go if a company gets, isn't, doing the volume they were doing. And so, we find that if a tenant would completely lose their job, then the federal government would pay 100% of the rent. And that might go on for a month. They get another job. It's a better job. Instead of the tenant, paying 0%, now they may pay 25%. And so there's an ebb and flow to this. And, again, it creates the stability that we as investors so oftentimes seek. The benefits to Section 8 tenants are there's a lot of paperwork and inspections, and a lot of property owners don't want to do it because they have annual inspections. They have, just the paperwork, and there's just, they have a pretty strict HUD inspection every year. So your maintenance costs are slightly higher, but your property's being well maintained, which I think is great for out-of-state investors. And so tenants just don't move as often. You know, CHA or Section 8 HUD, a lot of times the tenant will move and the new property won't pass the inspection. And so normally if you treat the tenant fairly, and you give them a good place to live, they're going to stay for a long, long time. And we all know as investors, the key to a good investment is getting a long-term tenant, and you don't want that turnover. And, you know, that's what we find, you know, with CHA or Section 8 tenants, that they stay for a very long time. Oftentimes they're not going to move like a market rate tenant and buy a property. They're going to rent for a long, long time. And so it really does create a lot of stability. And you know, again, you just don't have those turnover costs. You don't have the vacancy. And then one other thing I was going to say, you know, we use a software called AppFolio. And so for owners, you know, we send them a monthly statement, you know, with rents collected. You know, if we have to do any maintenance over $300, we get the investor's permission first. But, you know, those monthly statements, you know, have income expenses, and, you know, we do, you know, every 4 months we'll do a photo report, that'll show condition of the property, any recommended repairs. And, you know, we want you to feel like, even though you're far away, you have, you know, a good idea of the condition of your property, how the tenant's taking care of it. And we're just very proactive. You know, we know how important it is to you know, be at these properties and, you know, work on your behalf to, you know, make sure the tenant is doing their part. And so luckily, due to, you know, the internet and some great softwares and everybody having, you know, iPads on our team and iPhones, we can offer some pretty nice, you know, photo reports and you know, keep the investors in the loop on, you know, what's going on with their properties. And of course that money is distributed, you know, via ACH payment, you know, the 15th of every month. And so we have a really good team, really good property managers, leasing coordinators, maintenance guys. And again, I just say we treat your property like it's our own, and want you to have a good investment that performs well for you.
So do you have any property examples you can walk us through?
Sounds good. So this first building is very indicative of a brick, you know, two unit building. This is a 2-3-bedroom, 1-bath units, and, you know, this is, you know, full masonry, you know, wrought iron fence yard, new kitchens, baths, hardwood floors, paint. And so this is a property that we're offering at $175. It's currently for sale. And so, you know, the annual projected cash flow on this is $21,121. And again, if most people are financing these, so in this particular case, you know, putting down, you know, $35,000, your closing costs are $3,500, and your principal interest payment are about $773. Again, your taxes $180, relatively low from what I see on a national basis. Insurance $83. Our property management fee is at 8% of collected rents, and so your total cost on this is $1,212. And, you know, most of these, you know, rent for around $1,100 to $1,150. We might get $1,250 on something like this, but we always try to be conservative on our numbers. And so again, if you finance this, you know, monthly cash flow is about $987, and your projected annual cash flow is about $11,845. You know, tenants pay for electricity, heat. In Illinois, the owner pays for the water. Next slide. This is a very typical 3-bedroom, 1-bath ranch. This one we're offering at $107.5. Really nice neighborhood, just down from a park. Has a 1-car garage, and so this one, down payment on this, something like this would be $21.5. Closing costs of $21.50. Your initial investment $23,650. Principal and interest is about $475. Again, pretty low taxes on these single-family homes, $173 a month. Insurance, we provide, you know, we have a group policy, so we're able to provide really low-cost insurance, $36 a month. Our management fee, total monthly cost on this $800, monthly rent $1,450. This one's currently rented at $1,450, and so monthly cash flow about $650, and your annual cash flow about $7,800. As a cash purchase, your annual cash flow is about $13,500. So, numbers. This is pretty indicative of what we're able to offer. Here is the next one is a 4-bedroom, 1.5 bath. This is the larger 2-story home. Really nice neighborhood. Quite a bit of new construction here, and this one is currently leased as well. But down payment on this would be $23,100. Your total investment is about $25,000. Your principal and interest is about $510. Taxes on this one are a little higher because it is a large 2-story home. This house, being sold to like an owner occupant would probably sell for $145 or $150. We sell these because we want to give the investors a certain return, and so sometimes we have to really mark these down to offer, a certain return to investors. So this is a great house. Again, insurance on this $41. Pretty low cost. Property management, all your monthly costs are about $854, and again, your annual cash flow on this is $7,500, or if you pay cash, $13,593. And so these are all just a variety. We have frame, we have single families, we have 2-unit buildings, 3-unit buildings, 4-unit buildings, and then the larger buildings. And but these are pretty indicative of what we're able to offer, in Chicago. And then we also we offer properties in the southwest suburbs. Rents are higher there, but the taxes are higher as well, and but relatively similar returns on those properties.
Do you think that this 185? I'm still looking at the multi-unit here. No, not the multi-unit. The one right here that's 115,000. That 185,000 taxes, is that based on the price that the investor pays, or can the investor expect that to spike up once the city figures out how much they paid?
Yeah, no, it has nothing to do with the sales price. It really has more to do with the square footage of the lot and the square footage of the home. That's how taxes are, calculated here in Chicago, and so
that's interesting. I did not know that. All right, great. So you also have southwest suburb properties where taxes tend to be higher, but of course that just completely depends on what suburb you're in, what little city or village you're in. But then
Right.
also rents kind of make up that difference for the most part.
Yes, yeah, the rents are substantially higher in those areas, but your taxes on a single family home in Chicago might be $1,500, and in the southwest suburbs they might be $6,000 for a small single family home, but the rents will be $4,000 or $5,000 more annually. So the numbers normally work pretty well there as well. It's just the taxes are substantially higher. In Chicago we have so many. We're so densely populated. Those taxes get spread out amongst millions of people, and they're relatively low in some of the suburbs where you get pretty large lots. The taxes are substantially, and they're less densely populated. You get some pretty high taxes.
Right, because if the city that you're in is got 38,000 people in it, then their total tax bill is divided up amongst those 38,000 as opposed to the millions in Chicago, right? So it's just a matter of simple math and how big of a slice of the pie you have to cover.
Sure.
Yeah. Okay. We've got a few questions here that I would like to just kind of go over. And hey, do you know what HACC stands for?
That's Housing Authority of Cook County. Same thing.
Okay. So here's a question. Somebody writes in, I have a Section 8 tenant whose HACC was cut in half, and she isn't able to pay the rent. She won't move out. How do you handle this situation?
question is that, again, maybe HACC was paying the entire amount of the rent. Let's just say it's $1,500. All of a sudden, they went in, reviewed her income, and said, "Hey, wait a second, you're making a lot more than you were a year ago. Now we'll only pay $750, and you're going to pay $750." A lot of the tenant, may be saying, "Well, I can't afford to pay that." Well, you probably can. You're not used to paying it, but you probably can. So in this case, unless there's a mistake and they need to go back in and say, "Well, wait a second, I'm making the same amount I was before." Then if they feel like they can't afford to pay it, then they need to, we would give them a 30-day notice to vacate the property. And if they don't move out, then, and they're not paying that portion, then we would start the eviction process. And most tenants are like, "Hey, I don't want that eviction on my record. I'll move in with a relative. I'll do something," but I'm.
But if they don't, I'm just being a pessimist here. But if they don't, so June 1 rent is due. They don't pay it. So you file a 30-day. They still haven't paid July 1, 30 days later. So then you start the eviction process. And if they're just indignant types and they won't leave,
yes,
how long would it take from July 1?
Well, from the time you file that paperwork with the court, it's about a 60-day process. Now, again, if they get an attorney and say, "I'm being treated unfairly," and they can buy maybe another 30 days. And a lot of it too depends, like in the wintertime in Chicago, when it gets below like 15 degrees, they won't throw somebody out, if it's like 10 degrees. So, but what happens is, it normally doesn't get that cold, or if it does, it's just temporarily. And as soon as that, as soon as it warms back up and gets over 15, they start back into the process and they'll, move somebody out. So,
and how often do you see these evictions actually go? I mean, we talk a lot about it, but how often does it really happen in your experience, realistically?
Well, with our 350 units, I mean, I would say that, not very often. I mean, I would say, 1% of the time, or, it just normally doesn't get to that point. We can normally get the tenant on a repayment plan, or we'll tell the tenant, "Hey, if for some reason you can't afford to pay, it's okay. Just move out, and then we'll freshen the unit up and we'll move another tenant in. But don't stay and not pay and get an eviction on your record." And so we normally don't have to do that. So.
Okay. We've got a lot of questions on this, and so I always like to point this out. There's a reason that we don't say your name on the webinar. We want you to contact your IC or investment counselor, and we will have a conversation with you and then send you the information for Chicago. At that point, you as a Real Wealth Network member can just call or email Chicago directly, speak to the gentleman that we're hearing from. And the reason we do that, we're not trying to be mysterious or sneaky. We just don't know who's listening, and anybody can listen to the webinar. We much prefer to have you go through us so that we aren't sending to our affiliates like Chicago, Jacksonville, Cincinnati, Cleveland, Houston. We don't want anyone just going to them and barraging them. We want those folks out there working, fixing properties, finding houses. And if we just sent them everybody, they wouldn't be able to do that. So we qualify you a little bit. We talk to you. We make sure that that market is appropriate for you. It could be a 5 or 10 minute conversation. It's not like, it's more like a conversation that just determines what your goals are. And then we send you that information. So people are saying, "Hey, what's his name? What's his phone number?" We don't say that on the webinars. You go through your IC. If you do not have an IC, an investment counselor, very easy to get one. There's only 3 of us. There's no wait list or anything like that. You just go online, you sign up. First you speak to Kathy McBride, and then from then you move on and you get a investment counselor. So it's a pretty easy, painless process. And the other thing I wanted to point out is that all of these webinars do get archived. We are recording this, and we will archive it on the site. Usually takes about a day or two to post-production, edit it and stuff. But essentially, we put it on there. And to find the Chicago webinar, you just log into Real Wealth Network. You go to Invest up at the top. A drop-down box appears. You select Chicago. It'll take you directly to the Chicago page. And you scroll down and just kind of keep scrolling past all the market information, other goodies that we have on there. And then you'll see a little box that says, recent webinar. And it'll have, my smiling mug, and it'll have a play button, and it'll have the date. And obviously today's date is September 6th. So just that's how you can see that. You can play it again and again and again if you like. So anyway, there you have it.
Hey, Ben. So
any point you'd like to make about Chicago?
Well, Ben, I was going to say, we'll be out in California, so weekend of September 22nd, for your live shows there, and then we have a tour in Chicago that will happen in October. I know Kathy will be out here for that, and so we should have a lot of fun looking at.
Has that date been settled? Do you know what that date in October is?
I do not believe it has been settled, but I believe sometime in the next few days it should be up on your website with the hard fast date on that.
Gotcha. Okay, perfect. All righty. We've got a few more questions here. I'm just seeing if there's anything else that we haven't talked about it. Let's see. Another question on investment counselors. Just go online. It's real self-explanatory there. Log in and just look for schedule a strategy session. Let's see. I think there's something else here. Okay. Is there, and this is the last question that we really can do, but what's the most common cause for a unit being vacant for like a prolonged period? In other words, you just can't, for some reason, get it rented. Does that happen to you very often? And I would imagine the most common cause would be because you're asking too much rent for it. But what do you think?
Well, yes, that can be the case. The other reasons can be, again, like small bedroom sizes or closet sizes. When we have an owner come in on a property that we didn't buy, and they contact us and say, hey, we want you to manage our building. It could be on what I would call a B or C street, and not the greatest block, and that makes it more challenging to get rented out. So there are always the condition of the property is another one. If it doesn't show well, can be. So there's a lot of factors on why it might take longer to get something rented out. But most of the properties that we buy and rehab, they rent out really quickly. They're on pretty good blocks, and the rehab is nice, and everything is fresh and new, and they rent up pretty quickly.
Perfect. Okay. All right. Well, that about does it. If you're interested in learning more about Chicago, like I've been saying, contact your investment counselor. And if you don't have one, then it's real easy to get one. Just go to realwealthnetwork.com/connect. No charge to do any of this. It's just a conversation. It's a good thing to do. And not only does it get you access to Chicago, but access to any of our other affiliates as well. We kind of help you narrow down what's a good market for you, and we go from there. We also have syndications and some other things. It's all on our website. And I will reiterate, this will be archived and placed on the website on the Chicago page. So if you're interested in replaying it, or if you missed the beginning, it will be there. All right, everybody. Thanks so much. We do this every week, noon Pacific, 3 p.m. Eastern. This is Ben Smith, Director of Investor Relations for Real Wealth Network. And thank you so much. We'll see you next week. Appreciate it, everybody. Bye-bye.